In this video, we'll talk about the current state of the market here as we wrap up 2023 in Bellingham, Washington, and perhaps more importantly, where things are headed as we move into 2024. And if you stick around till the end, I'll provide you with some predictions for the coming year that you don't want to miss. We're going to get started right now. Hey, if this is your first time to the channel, we encourage you to like, subscribe, and hit the bell for notifications so you can be the first to know about all the content that we're releasing about Bellingham, about Whatcom County, and all the great things that are going on here in this area. My name is Jeff Engen. I'm with MJB Real Estate Group here in Bellingham, and every day we get calls, texts, and emails from people just like you who are considering a move to this area, and we absolutely love it. So whether you're thinking about moving tomorrow, 10 months from now, sometime in between, we encourage you to reach out. All of our contact information can be found below, and we are standing by and ready to help you in any way that we can. But for now, let's talk about 2023, 2024. What's the market doing? Where's it headed? Let's jump in right now. Unlike some of the 2023 recap videos that you might watch, that you might come across, where they're hitting you with just a bunch of facts and figures with regards to what the market did in terms of total dollar sales, total unit sales, days on market, average sales price, things of that nature, I'm not going to cover that here in this video. What I want to talk about is essentially this conversation that I've been having with a lot of buyers, ultimately also a lot of sellers, and that's around the subject of high interest rates. Now, if you've been in the market as a prospective home buyer, if you've been, considering selling your home, or even if you're not in the market and you're just kind of keeping, even at a distance, a general pulse on what's going on with the news and the media, you've undoubtedly heard about high interest rates. Now, these high interest rates have been as high as we've seen in the last 23 plus years, going all the way back to the late 90s, early 2000, when rates were approximate to what they are now. Normally, when we talk about the issue of high interest rates, we talk about the impact that that has on the buying side of the market. And the reason for that is, of course, it's going to impact the affordability of the home that a buyer acquires. For a lot of people who were searching for a home back in late 2020 through 2021 and didn't find a home, they were pre-approved at a very low interest rate. That could have been, 2.75%, 3%, 3.25%. Something to that effect. And if they didn't find a home, as rates continued to climb, hitting 6% in June of 22, a lot of people at that point in time said, this is just too much. My affordability has changed so much. The amount of home that I can get for the number of dollars as a result of this change in interest rates has decreased dramatically. And for that reason, I'm just going to sit out. I'm not going to participate. And that makes sense. But the other circumstance that we're dealing with in this current market is that because of these historically low interest rates that we saw, again, going back into the twos, just about everyone on the planet, or in the United States, refinanced their mortgage when those rates were low. And so now, as a prospective seller who might be considering putting their home on the market, they find themselves in a similar situation where they've got a really great interest rate on their current home. Their affordability is great. And whether they need a bigger home because they need more space for their growing family, whether they need to downsize because the kids have moved out and the home that they live in now is just simply too big, it doesn't make good financial sense, or it's at least hard for them to wrap their heads around trading that 2.75% interest rate for something that's been more like in the sixes, the sevens, or even as high as 8%. And so the result of that has been that inventory on the market has been very, very low, because a lot of sellers are not in a position to sell or not wanting to sell. Now, you got to keep in mind that with Bellingham being as desirable a place to live as it is, that demand is always high to be in Bellingham, regardless of what interest rates are doing, regardless of what home prices are doing. And so we have this issue, basic economics of supply and demand, where demand remains relatively high, supply remains, all things considered, phenomenally low. And that is the reason that we've not seen a dramatic impact in terms of home prices as a result of high interest rates. We would normally think, hey, if rates go up, then prices are going to come down. There's going to be fewer buyers, etc. But again, because of this issue with sellers not wanting to give up these low rates that they've locked into, we have an inventory issue, which is keeping prices stable. Now, one thing that's important for you to note, there's been a massive, drastic decrease in interest rates over a relatively short period of time. One of my lenders in particular here locally sends out regular rate updates as things are progressing throughout the year. And so if I go back and I look at the data from the emails that come through, I see that rates as of October the 10th for a 30-year fixed mortgage were at approximately 7.75%. Fast forward to November 21st, rates had gone down to 7.125%. As of December 12th, rates hit 6.875%. And as of just yesterday, December 19th, rates were at 6.375%. Now, that's a 30-year fixed mortgage between 20 to 25% down and would require that you have something like a 780 or better credit score. But those types of rates are available. So we've gone from nearly 8% all the way down to just above. I had another lender tell me they're at about 6 1/8, 6 1/4 in a relatively short period of time. We've not seen rates come down this quickly since the 2008 housing bubble crisis. So what is this impact going to have on the real estate market here in Whatcom County and really nationally for that matter as well, as we wrap up 2023 and move into 2024? Well, my prediction, and we'll go back, this will be great to put this out there and 6 months from now revisit this and see how this holds up. Always preface these conversations by saying I don't have that crystal ball that gives me certainty with regards to what the future holds, but here's my expectation for what happens as we move into 2024. To substantiate my expectations a bit, I want to share that Business Insider and a variety of other news entities have released similar articles. But back on November 30th, 2023, Business Insider released an article that's titled, "The Federal Reserve Will Cut Interest Rates 6 Times in 2024 as the Economy Shows Clear Signs of Cooling Down," ING says. So you can Google that, you can read that article, but essentially what you'll find is that the Federal Reserve is favorable to the data that they're receiving with regards to inflation, but they believe that the increases they've made over the course of the last couple of years have curbed inflation, brought things down to a more manageable level, and as a result, they can feel good about taking their foot off the gas and effectively putting the car in reverse to move rates back down. Now, we've already talked a little bit about rates coming down dramatically over a relatively short period of time. What could continue to happen as we move into 2024 if the Fed continues to reduce rates could be significant, and that could be to the tune of rates getting, certainly into the fives, I would think is very reasonable, but presumptively could even get back into the fours. Now, would we ever see like 4.5, 4 1/4? I'm not sure, but I think 4.75 is definitely within the realm of reasonable. And so what impact will that have on the market in the short term and as we move through 2024? Well, as we talked about, a lot of buyers who were ready to go, ready to buy a home, motivated and excited to buy a home, simply decided to pull out of the market because rates had gone up so high and their affordability was so impacted. But as things start to come down, those buyers will be willing, ready, and able to re-enter the market pretty much on a moment's notice. This decrease in rates, like we talked about, will also put sellers in a more favorable position to feel good about, okay, yeah, we're going to pay a little bit more, but it's not the disparity that it was. I think it's time for us to go ahead and list our home. The challenge with those two sides of the market is that buyers can enter the market tomorrow. Very simple, very easy to do. They reconnect with their lender, they refresh their pre-approval, and they're back in the market shopping for a home. Sellers, it's a little bit more complex and it takes a little bit more time. So, what improvements and updates do we need to make? When do we want to go on the market? Do we have a place to go if and when our home sells? It's much more complex and much more complicated. And so what I anticipate will happen in the short term is that rates come down, buying activity or buyers in the market will increase somewhat dramatically, which is likely to have an impact on the market with regards to, getting back to a situation where we're receiving multiple offers on individual homes, causing escalations, causing the waiving of contingencies, things that are somewhat similar to what we saw back in the 2020, 2021 markets. I think that will be curbed a bit as we move into spring, probably summer, as we start to see a lot more home inventory come on the market. But if you're a buyer and you're considering purchasing a home, I would strongly encourage that you get out in the market and you begin your home shopping, buying journey immediately, as opposed to waiting for rates to come down further, because at present, there's still not a lot of competition. Homes are still going at or around their list price, in some cases lower. You're still retaining all your contingencies. You're having your home inspection. You're keeping your financial contingency, and you're obtaining some seller concessions in many, many cases. Fast forward 3 months from now, that may very well not be the case. And so my expectation for the 2024 market is we see rates come down, we see buying activity and competition pick back up, and that we begin to see home prices increase once again. It'll be interesting, like I shared, to look back a few months from now, see if I was right, see if I was wrong, see what the market is doing. But that is my expectation. If you have any questions about the real estate market, any questions about buying, selling, just understanding the market in general, if you have a question about Bellingham that's completely unrelated to real estate, I encourage you to give me a call. I'd love to be of help to you in any way that I can. One more time, I encourage you to like, subscribe, hit that bell for notifications so you can keep up on all the content that we're releasing. And as always, thanks so much for taking the time to watch this video. I look forward to seeing you again soon.